Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates, and we're now on Thursday, the 2nd of August, 2018, just getting onto the 4:20 p.m. Central Daylight Time, and this is your agriculture update. Now, I'm going to start off with an announcement, gang. This is my last video. Of course, I'm teasing you. It's my last video because I'm going on vacation. I will not be back until August 13th. That is Monday. So this is the last video that I'm putting out until then. Tomorrow I begin my vacation. Bye-bye, going out west, going to Montana, love it there, and have a good time. All right. For the markets, though, as I'm leaving, when I'm gone, you know, you're going to have to deal with the on and off part of the Chinese trade wars. We don't know what's going to happen yet with NAFTA. That can be a boon. We don't know the weather, and you've got to pay attention to that for the wheat market. The soybean market is going to work primarily off of something different, and that'll be what it thinks about trade with the other markets. In other words, what does it think of trade with China? If you think everybody's can make up China, they can't, and that's the bad news for the market. When we look at a weekly area chart of closes, the market is out of its downtrend. That doesn't mean it can't fall further. It still has downside bias because prices are right now under the 18-week average of closes, and that gives the market a downside bias. The market's had a nice rally. I called this formation when I had left a cup, saucer. Go look it up. It's in our 12 chart patterns. But when you get this, and if it starts leaking down, you can drop rather hard. To break the pattern, you need to get back up over the high over there, that 922.25 zone. If this market should take out 873, you could be on your road to challenge these lows again. It is just something to think of. If you got under 873, it would break the swing line low. Your support has to come in then at the 18-day average of closes. If you close under that, you put back into play what? Maybe the lower Bollinger Band. But keep in the back of your mind, none of that's happened. So as I'm leaving here on August 2nd, you have a market that's got higher lows, higher highs. It ran to the upper Bollinger Band and ran into a wall of resistance. And as I mentioned, it's overbought as can be. Overbought into the wall of resistance, the market is stalled. When you come to the meal market, it's the same pattern. Momentum here turning down, not in an oversold condition. If this market were to break back under this low, let's get right to it for you, 330. Well, then you're looking at seeing how the market supports itself at the 329.30 level. If you're bullish, you don't want to see that happen. It would have to rebuild. If it occurs, probably when I come back, you still won't be trending if that occurs. Remember I told you the weakest sector of the soy complex is the oil, and that's because it's really not the one that's in demand. And it gave up everything. It fell back under a previous low. It is not trending any longer. The market's got momentum pointing down, bias pointing down, and no longer in an uptrend. In the corn market, keep your eye on the slow stochastics. As long as they stay embedded, you still have a strong market. When they lose that, it will happen with the red number falling and closing under 80. Until that occurs, there are buyers in the market. Now tonight, Thursday night, you want to keep an eye when you reopen. You had a pretty good size range day. You close near the low. It's going to weigh on that percentage. If that gives ground and you take out this 378, don't be surprised if the market tries to get back at the 18-day average of closes. The powerhouse market, or trying to be a powerhouse market it was wheat. Now, the low close, look at what you did. You got a number at 78.94. You were all the way up in the 80s, in the 80s, in the 80s. You lost it. Unless this market pokes strongly to the upside, this market gave you a time frame saying, folks, I might be pulling back down to support over here. That's just what the indicator says. In the sugar market, you have an embedded reading. I realize you had an outside day up today. Why not? You have to get back over the Bollinger Band. You only stay out of the Bollinger Band 5% of the time. Out of that 5% of the time, what do I teach you? I teach you that when you look at that, count each one of those days as a rule of thumb as one of those percentage points when they're in succession. So coming in, you had a 3% chance of staying under the lower Bollinger Band. You didn't get a dramatic rally. What you did is get a pop away. For the bears, you got control of the market. You got lower highs, lower lows. You still have an embedded reading. Lose that reading, then get excited that maybe you can get back to 1100. Don't lose it. You can just ride that lower Bollinger Band. In the coffee market, oversold, not a trend. You got a higher high and a lower low. That's not a pattern to work off of. Cocoa, remember what I told you, and I've been saying it daily. The embedded reading, this is that riding the lower Bollinger Band. And if sugar is going to grab hold to the downside, ideally the pattern will look like that. Doesn't have to, but that would be ideal. Until that embedded reading is lost, you're still very much in the down pattern. Cotton did just about, it was textbook, to be honest with you. If you take my charting course and you take it and you realize you get an overbought market that's approaching a Bollinger Band, if you hit that band, the odds are the market's going to correct from there. Doesn't mean it's going into a bear market, it's going to correct. The support, 18-day average of closes in this case. Today you drop down, go to the 18-day average, bounce. That's exactly what it should do. Cattle's interesting here. It cannot afford to take out yesterday's high. So yesterday's high in the market was 110.87.5. If it does for the bears, it puts the market back to a bullish formation of higher lows, higher highs, and possibly putting the upper Bollinger Band in play. To keep the market bearish, you don't want to take that down, and you want to get a close under the 18-day average, which would put into play the potential for the 100-day average and even maybe the lower Bollinger Band. Feeder cattle, I think you can see. That's why I call this line in the sand the 18-day average of closes. You've got a market that can go either way now. The bears have control as of tonight. Market's in a downtrend, lower highs, lower lows. Take out 152.60, 100 points higher, and you could end up with higher lows, and a close over that would put the market back into the higher high category. In the hogs, you finally have broken down to a number where I think the pros are getting out of the market. You're leaning right on the lower Bollinger Band. They haven't had a shot to take money off the table. I think they're doing it right now. So while I'm gone, if you haven't signed up for my morning subscription video, you might want to do it. You're going to get an awful lot when I get back from town. I'm going to be writing my metal reports when I get back. That is for certain. I'll get back into talking. And I have been bearish on this gold, throwing out to my clients, warning them if you took out a low this week, watch out. And it sort of happened today. But you get the commentary. And some of you can get just the commentary if that's all you want. We're going to give you a reduced price on the commentary. All you need to do is call us. Go to our website. We'll get everything put up for you. I'm Ira Epstein. You have a great day, and I'll see you all on the 13th. That'll be a Monday, August 13th. Take care.